Welcome back to my YouTube channel. My name is Sire Abram. For those of you who do not know who I am, I'm an options trader and I've been doing this for about 3 years now. Throughout my first year of trading, I made a ton of mistakes, and my goal is to help you avoid making the same mistakes that I made within my first year. Before we dive into today's content, make sure that you are subscribed to the channel. And also, if you learned something throughout this video, or if you like something, feel free to let me know in the comments. So today we're going to be covering how I made a little over $2,700 before lunchtime with only taking a few trades. This isn't going to be something super complicated. I'm going to make it very simple for you guys because trading is just complicated alone as it is. So the first stock I traded this morning was AMD. And what I like to do is always start off in a 1 hour time frame, okay? So the reason why I started off in a 1 hour time frame is because I'm not looking to swing this. I'm looking to day trade this, okay? So you always got to start off with your higher time frames and scale down as you approach your entry point. So if we're looking at AMD on the 1 hour, let's just start off with the most obvious, okay? So the first thing that I noticed is how price closed on this red candle at $99.29, okay? And then in pre-market, price was all the way down here around $94.82. So the reason why price dropped so much from yesterday's close to today's open is because AMD released their earnings. I'm not sure if they missed their earnings report or if they beat it. It doesn't really matter because all we care about is what price is actually doing. So I trade very simply off of supply and demand. And I'm going to break down all this terminology for you guys within the next couple of videos. So if you have any questions, just be patient. I will answer all of them for you. So just to make this as simple as possible, when price opens lower before it closed yesterday, so when price gaps down, it's going to leave behind supply on the last candle. So if we open right here at 94.86, and we closed here at 99.23, this candle is going to be our supply zone. Okay, so we're just going to mark this as our supply. Supply on the 1 hour time frame. So we're going to say 1 hour supply. All right, so now it's vice versa for demand. So right here, if we look back, we can see prices hovering around this area in pre-market. So now let's look to the left to see why it's doing so. So here price closed at 94.51 and we opened here at 95.72. So price gapped up. So when we have an impulse move up, which is a gap, we're going to leave behind demand. So this candle right here is going to be our 1 hour demand zone. So let's take our text and let's make this 1 hour demand. Okay, so now we have this area marked off as our 1 hour demand zone. So when it comes to taking entries, I'm really only looking to take calls out of a demand level or take calls, or not take calls, but take puts out of a supply level. So since price is hovering around this 1 hour demand, we can look to take calls. So now, since we're looking to take an entry, we're going to scale down to a smaller time frame. All right. So let's go to a 3 minute. All right, so we can see here within this whole 1 hour demand zone, we have smaller demand, which is created on a smaller time frame. And this is how it all works together. So if we look back here, you can see we have an impulse move to the upside, candle before, demand. So now let's highlight the smaller demand right there, which is that one green candle. And let's turn on the opacity so we can actually see. All right, so within this blue area, this is our 3 minute demand. So let's mark this as 3 minute demand. Okay, so we took our entry off of this because we see what? We saw price come down and bounce straight off of it. All right. So we never want to trust our first candle because you just simply don't. because price can easily just reverse off of that. So if we have this as our low and this as our high for our first candle, we can play this. So as price started bouncing off this low and moved higher, then we can take our entry and have our stop loss just be that low within that demand level. Or if you want to risk a little more, you can just use the bottom of this demand as your stop loss. So what I did is I took my entry off this candle, had my stop loss right here. And now when it comes to finding our target, let's go back to our 1 hour time frame. And we're going to target this 1 hour supply. Okay, so now let's go back to our smaller time frame. And this is what it'll look like. So since we took our entry here, price just had a clean move to the upside and never even came back to test our stop loss. So that's perfect. That's exactly what we want to happen with our trades. So this trade right here gave us an over 100% return. So all that means is you could have doubled your money. And this is literally less than an hour. So well, this was like 8:33, and by 9:15, your money doubled just like that, just off one trade right there. So if you had $100, you would have turned it into 200. If you had $200, you would have turned it into 400, 500 to 1,000, 5,000 to 10,000, and so forth. You can do the math. So when it comes to trading, one thing that I always like to note is it's not about, the dollar amount. It's more about the percentage that you make, because as I said in prior videos, if someone trades with $1 million and they make $100,000, like, yeah, that's amazing. But at the end of the day, they only made a 10% return. Whereas with this, you could have risked $1,000 and made another $1,000 in less than an hour. That's more impressive to me. So this trade right here gave us 100% return just off this short move to the upside. So now when it comes to understanding when to scale out and when to take your profits, you need to start looking at some crucial things, okay? So you need to start looking at highs and lows in prior supply and demand levels. So for example, as price broke that high here, we have no more supply levels until we reach here. So what we're gonna do is we're gonna look at these older wicks, so the highs and lows, and we're gonna play those as our targets. So we can use right here, this low as a target. We can use these lows over here as another target, and we can just keep on doing the same process until we reach the supply level. But I alerted the Discord, take your profits all along here, right? And it's literally that simple. Trading does not have to be complicated by any means. All right, my goal is to make this as simple as possible for you so that you guys can end up doing this for yourself. Because it's the thing, you can take my signals all day long, but let's say I get tired of trading and I just quit for some odd reason, not that that would ever happen, you'll be stuck and you will not understand what to do. So if you just watch these videos over and over and over again and retain this information, trust me, you will get there. You will definitely get there. It might not happen overnight, but it'll happen very soon. And the thing about it is, when I started trading, I had to learn all this, or a majority of it, by myself, just from trial and error. But when you guys have someone like me breaking all this down to you, I mean, you have the advantage. So I'm sure you will learn a lot faster than I did. Okay, so that was the first trade that I took today, this morning. And the next trade I took is Facebook calls, which is under the ticker META. Okay, so with this trade, we can see price hovering around here in pre-market. And we saw price drag down here before moving back to the upside. So if we go to our 1 hour time frame, let's look at how I charted this before. So this was the first candle for today. So let's pretend that that candle was not there. So since price gapped down, we left behind supply, as I showed you guys earlier. So this is going to be a target. And then also right here, we have the impulse move down. So this right here is another supply level. All right, so this is going to be another target. So if we scale down to a smaller time frame to try to find a precise entry, all we got to do is look at how price is moving. All right, and I'm trying to find the time frame that I took my entry off of. Let's see, 15. So yeah, I can't really remember. I don't remember what time frame I took that entry off of, but let me just go to the Discord and let me see what the entry points were. All right, so for Facebook calls, the original entry was 163.90. So 163.90, which is right here. Let's make this green. And our puts entry for our with confirmation was 162.19. So about right here. Yeah, about the top of this. Okay, so when it comes to taking your entries, you want to have that confirmation, just like I showed you guys with the prior or with the previous trade. So with Facebook, there isn't necessarily any confirmation to end up to take a short position on this, right? We don't even close below our puts entry, so there's no point to take puts. So what can we do? As price wicks right through our puts entry and comes right back up, we can take that. And that's exactly what we did today. Took that entry here, stop loss that low, and where are we going to target? Our higher supply levels. So just like with the last trade, you can see that we are literally risking very little to make a lot. And this trade ran for well over 100% returns, just like AMD. So on this trade, you could have easily doubled your money as well. So you can see what happens is price comes right through the supply. And once we break through it, it's invalidated. So we erase it. And I mean, literally it's a clear shot because we have no price action all throughout here due to that gap. The price just runs right through it. So now as price approaches our supply and we see price slowing down, how do we know price is slowing down? Because you can see here, we have all these green candles, all this momentum to the upside. And once we reach this level, that momentum dies down. And that's where you want to start to take your profits at, okay? So that's another example of a trade today on how you could have doubled your money. So now let's look at what we were really risking for the reward. So we were risking Facebook going down 69 cents, capture a $7.27 move to the upside. So you could have made hundreds of dollars on this trade right here, and you literally would have only been risking maybe $15 max. You always want to find the best setups, and it only comes when you're patient. If you just enter trades for no reason, how are you going to expect to make profit, right? You're just going to get lucky or you're just going to get burnt. One of the two. We don't get lucky within this market because we know exactly what we're doing, right? We have our entry points set at a certain spot for a reason. We have our stop losses set for a certain reason, and we want to stick to those. So we want to stick to our rules, and that comes with discipline. With trading, you can't be profitable without having discipline. All right, so the next trade that I took today was SPY. I took calls on SPY. And let's see, was it SPY or was it SPX? I think it was SPX. Let me see. Okay, it looks like my chart just got deleted, so I'll put this back up. Let's see. Okay, yeah, I was right. It was SPY. SPY, SPX, interchangeable. I like to trade both of them. Oh, okay, there it is, right over here. Okay, so I took this trade off of 1 minute time frame. And this is exactly how I did it. So let's erase, oh, where's the replay button? Here we go. Let's erase all this here, all right? So here we saw on the 1 minute time frame, price is falling down. So when that happens, we want to look for highs and lows. We want to look at liquidity. We want to see what price is taking out and where price could potentially reverse. So if we mark this low right here, we saw price come down and wick right through it and come right back up. So that is a really good sign that price could reverse. So as I mentioned earlier, you never want to trust that first low here, never, because it could easily just fake you out and continue going lower. So what we did is we waited for the next candle to open and we took our entry based on that second candle. Oops. So we have that low here. Price wicks through it and we took our entry off of that second one. Let's delete this circle. So we took our entry here and our stop loss is going to be this low. So price created a new low and moved higher. So this is going to be our stop loss. And this is very tight. I believe this is only like an 8-cent difference, maybe 9 cents, 10 cents max. Yeah, a 9-cent difference. So we risked SPY going down 9 cents, which we maybe would have lost $3, maybe 2% on this trade if it went back down. For SPY to go up like $3 and some change. And on this trade, we got a 70% or 76% return on this. And this is what this is how the trade ended up playing out. Let's fast forward this. All right, so you can see here, there's really no reason to sell out of this trade if we are understanding how to play this. All right, and this is just a clean move to the upside. It's a really clean move. And how do we do this? We did this just by using supply, demand, highs and lows. That's exactly how I trade. So this ratio is a 1:41. Since this is on a 1 minute time frame, I mean, it only was a 76% return. It looks like it should have been more, but since we're on a small time frame, you have to keep that in mind. So if we switch this to a 1 hour time frame, it doesn't look like that big of a move, right? So I only use the smaller time frames to get the best entry possible. And this is how I took this trade, just like this. Waited for price to take out that low. So let's say price is moving like this. We have this low created here. Saw price take that out. Wait to see if we're going to close it below, and we didn't, and we reversed to the upside. New candle created, moved higher, and took an entry there. And had our stop loss right there on that new low. And just held it on its way up, just like that. That's exactly how I like to trade. And you can see here, because you're always risking very little to make a lot. And that's how you want to trade. Every single time. So as you can see here, there's not a whole lot of indicators. There's not a whole lot of, mess on this chart, because the way I see it is if your charts are very simple and clean, it'll help you become a better trader. Because at the end of the day, you don't want your mind cluttered. You always want to have the right mindset when it comes to doing this type of stuff. And if you got too much going on, you're just going to confuse yourself, right? You don't need a bunch of EMAs. You don't need VWAP. You don't need the MACD. You don't need the RSI. You don't need the volume profile indicator. You don't need all that stuff. Just use supply, demand, liquidity. It's really all you need right there. Let me see, is that it? Actually, no, I took one more trade. It was QQQ. So I took QQQ calls around 320. Yeah, it's just about over here. Yeah, here we go. All right, so once again over here, we pretty much had the same idea with this trade. All right, so we got that low created here. Let's make this cleaner. So we have this low created right here, and underneath there, we have this demand level. Why is this demand? Because we have an impulse move to the upside, candle before, demand. And now let's change this to light. Okay. So within this whole level, this is where we can look to start to take an entry, okay? So as price takes out that low, we never want to trust that first candle. By the second candle, pretty much do the same thing. And as we reverse, we can take that entry. So we took our entry about right here as price pulled back up, because that's the reversal sign, had our stop loss at the bottom of that low and just held it right on up from there. Now with this, I didn't get contracts that expired today. I got contracts that expired a little further out. So I was only able to capture about a 60% return on this move. But I mean, nonetheless, it's good money. And as I said before, when it comes to taking profits, all you want to do is go back to your higher time frames and target those supply levels for calls. Now, let's say we're looking to play puts, we're going to target demand levels because that's where price could potentially reverse at. And that's exactly how I took this trade. So all in all today, traded AMD, traded SPY, traded QQQ, traded Meta. These are the only 4 stocks I traded today, and I was able to make almost $3,000. And you see with this one, we got over 100% return. With SPY, we got about 70% return. Facebook, easily over 100% return. QQQ got about 60%, 70% return, if I'm not mistaken. So this goes to show all you need to do is just trade a couple stocks, right? I mean, at the end of the day, you really don't need to trade more than one, because if you catch one good trade, you can just be done from there, right? Like let's say with AMD, we put in more of our portfolio into that trade, got 100%, been done for the day. You could have doubled your account right there if you full ported. I don't recommend that, but I'm not a financial advisor. So yeah, just a couple trades a day, and that's all it takes. You don't need to do too much. Don't need to be glued to the screen. And just like that, all these trades literally took maybe a couple hours max total. That's really all it is. Trading does not have to be complicated. My goal is to help you guys understand everything that I do the most simplistic and the most realistic way. A lot of people on YouTube will come on here and they'll make everything seem super complicated when it really doesn't have to be. As you can see here, my charts are super clean, super simple, and I want you guys to prosper when it comes to this. I want to show you guys that if I'm able to do this and be a profitable trader and be successful within it, you can too, right? I was a college student when I started trading, and I just graduated college. So, I mean, if I could do it while balancing a full-time school schedule, there's no reason you can't do it. Now, if you work a 9-to-5 job, I mean, you can trade as well, but the only thing is you're just going to have to take what you can get. So like, for example, let's say, you're on a lunch break or whatever. And let's say, you start looking at trades and QQQ is right here. Let's say by the end of your lunchtime, QQQ clocks out right there. You will have been able to capitalize on this movement all right here, right? You just have to take what you can get. There's no point of being greedy. Because let's say you're like, oh, I'm going to hold on to this trade, even though I'm not going to be able to watch it. And let's say after work, you come back, now your trade's in the dirt. You went from here to down there. Then, I mean, it's not a good look. Just take your profits, go on about your day. No need to be greedy, no need to do too much. Just keep it simple and move on to the next trade. Because once you understand how to chart, there's going to be opportunities every single day in the markets. The markets are always going to be here. They're going to be here after we all pass away. They were here before we were all born. So, I mean, there's no need to feel that FOMO, right? You're not missing out on anything because new opportunities arise every day. So yeah, I mean, that's pretty much it. Today I traded with $5,000 and I made over 50% of that back. But I mean, just as shown in all these trades, I didn't actually risk that whole 5,000 because my stop losses are very tight. So let's say we put 5,000 into one trade and our stop loss is here, targets here. And let's say we risk QQQ going down 28 cents. That's not $5,000 worth of money, right? That 28-cent difference might be 60 bucks on a trade, right? So we're only risking a little to make a lot. So if you do this multiple times, you're gonna be a profitable trader, and I promise you, because this is the thing. If we take this same setup scenario 10 times, and let's say we lose 6 out of 10 trades and we win 4, our wins are going to overweigh our losses. And that's the whole goal, is we want to make sure we're putting ourselves in the best position as possible. How do we do this? We do this by understanding the fundamentals of charting, right? And don't worry about it if you are not caught up full speed yet, because I will break everything down to you the most simplest way I know how to throughout the rest of the videos. So this is the end of this video. Right now, I just recapped all the trades I took today. The date is August 3rd, 2022. If you enjoyed this or if you stayed to the end, feel free to let me know in the comments. Let me know what you loved. Let me know what you didn't love. And let me know where I can improve on. Let's see what's next. Oh yeah, and also make sure to follow me on Instagram at Sire Abram, SIREABRAM. I go live on Instagram sometimes to talk about trading. I have a lot of content on there. If you need any help, if you have any questions, feel free to ask. And lastly, I would say, if you have any worries about, what brokerage to start trading on, what I recommend is pick a brokerage that has a cash account. So personally, I don't use Robinhood. I use E-Trade because I get an unlimited amount of day trades with the money that I have settled. Every single day, whereas with Robinhood, you have that day trade restriction. So yeah, I hope you guys enjoyed this video. If you stayed to the end, let me know. Tell me what you enjoyed. I hope everyone here has a good rest of your day, and I will see you guys next time.